Hey guys, Sam back with you here. It's Wednesday, or pardon me, Thursday, December 14th, and had some members wanted me to give an update on Litecoin. This is a trade that we are in. We did buy it here, and one of the things that's interesting, because I have members from all over the world and with multiple exchanges. This is an interesting example today in Litecoin of the variation and the different prices that you see from exchange to exchange. Now this is a kind of a blessing and a curse with crypto. For me, my background being futures, forex, equities, index trading. It certainly would be easier if we all had one standardized price, but that's not the case right now. So, I suppose there's value in looking at how this is moving across multiple exchanges. Now, I'm not an advocate for attempting to arbitrage between exchanges. I think that's for a different type of trader. That's not what I'm about. But it is interesting to see here how I'm going to show you this on 3 different exchanges, how differently it's trading. So here, this is where the bulk of the volume is. So I'm over here on CoinGecko, which I often refer people to. When you're looking at an alt, I will often suggest that you look for alts with a score here of 50 or higher. So sometimes I think it's good to go to your dominant, your major cryptos and look at where they rate on this scale. So Litecoin comes in at 77. I think Bitcoin's at 95 and Ethereum's at 84. So when I'm giving you that scale, 50 is a good baseline to use. Doesn't mean that something that's below 50 couldn't get to 50, but for liquidity, for all the metrics that I would encourage you to read here about how they come up with the scoring system, 50 is a good number to use. Well, so here we sit with Litecoin at 77, and as we look at where the volume is, I'm going to show this to you because it's so radically different on 3. So of course the bulk of the volume is, as relates to the dollar, is on GDAX, right? So that's where you would expect it. Bitfinex, now US, for me in the US, I don't have access to that exchange, but I am going to show that to you because I have members trading that. Polo and Bittrex, of course, U.S. traders can get access there, but look at the volume here is Bitcoin. So when we go down to, we have to go down to way down here to get Bittrex. Look at this relative volume today for Litecoin to the Tether, where you would find it for U.S. traders on Bittrex or Polo. But on GDAX, man, there's your volume for the dollar. So let's go look at that. So here it is on Coinbase. So this is a trade we're in. This has been posted a couple of times in the room. Now, one of the things that I'll point out here that a few people have asked me about on YouTube, when you have moves this extreme, it's not a bad idea to go to a log scale so that you can see a little bit better. With the subdivision here, it doesn't affect your pricing, but it skews the numbers as you move higher, so it condenses down here. So it opens it up for you. So it's just a nice way to, when you have these extremes, note the difference here when I go here and open it up to when I go to the logarithmic, right? So you get better clarity here because it emphasizes the higher numbers. So here's the breakdown. I'm going to stay on the log scale so you can see it a little bit better. So we have, I'm going all the way back here to that's $50. So that's the start of this move higher. So we can see where that begins. So we get this is a little tricky here. We get this nice subdivision here. We get our 1 wave in, and then we get our 2. And here's that pattern that we see all the time where we're getting the short C wave. Up we go into just this gigantic rip that we've had into the 3rd. So assumption being that given the extreme move here, that hard to call that anything but a 3rd. But we get subdivision within it, so we can get a 1, 2, 3, 4. We don't overlap the 1. Then we get also yet again get subdivision here into the 5th of the 5th of the 3rd. So very technical. Not terribly hard to see. I'm on a 4-hour here just so you can get some perspective on this. So given that the assumption that we have a 3rd in and we're starting to retrace from that, we've got a blended fill here. So first buy was at the 38. Second buy was the front run on the 50. You can see the alarm here as that triggered for the entry. So we have a blended fill splitting the difference between the two. And we've got some upside targets here. Stop here, and as I will tell members, if you're more conservative, no reason to or I should say, it's not unreasonable to tighten up the stop to below that pivot, to just below it, right? So if we're going to get a good reaction here, as we've seen, typically I like to see in this case in a 4 hour, I'd like to see the bar close and hold above the 38. That's a good metric to use with regards to when to tighten up your stop from a spike down. So you can see that what happened here. Right, so algos wanted that fill, so you get a spike down. They front run on the 50 as they invariably do. Right, so you never, if you're trying to buy on the 50, you never put it right on the 50. You'll never get filled. If it's a good pivot, if that's going to be where you're going to get the pivot, it'll never go to the 50. You got to front run it. So we had a little front run on that, so we've got that now, and a blended fill because the first buy here was at the 38. Okay, so given that, so let me open this up. Let's go to the 1 hour, right? So you can see how this looks. So we get this little A, B, C down here, and we had, let me open this up so you can see it. So there's your A, your B. So here was the first buy here. So you can take note of this from this pull here. There was our low. Yeah, so here was the front run here on the so here's the algo target from this pull here. So up here, front run on the 50. Remember, it's always front run. Comes down and then equally front run ahead of the 23. So again, very rarely does it tap the line. So this was the first entry. We had a nice reaction. Then we come back down. They buy at the 50. So we have, again, that's the blended fill. Right? So it's an averaging down. Right, so here's the blended fill. Here's it's reasonable stop. That's the more conservative stop. Here's the target up here for the negative 23.6. So let me close this back up a little bit. So I'm still on log scale just so you can see it. And I got to scrunch this a little bit so we can get this over here. So off to the side. So looking at that, what do we have? We just have very technical trading. We can pull that off. So, more. Putting a channel on this, not a bad thought. So, if we get a break up above that, so any signs of a movement up towards this price action breaking out of that channel would be a good sign. So the assumption is that we have a pivot here for the 4th, and no reason not to assume that we don't stay technical and that we go up first target here. Here's the negative 23 off of this 50, and if we get an extreme move, there's the negative 618. Right, so pretty straightforward trade. I mean, it's just right by the book. Where's the high probability zone for a 4th wave between the 38 and the 50? Where do we go? Right, I mean, we front run the 50, but we go right into the box twice, right? So you got a nice little fill there, reasonable risk reward. What are we at there? That's 10.2 to 1. Now it could go down. It could keep going down. We don't know that we have a hard pivot, but as a trader, that's as good as it gets. A little front run on the 50, your stop can be, so you can reduce exposure. Since we had the bounce there, you can reduce your exposure. You maintain the upside. No reason to keep this way down here under the 65. Why take all that risk? Even though it may do that, I'd rather get stopped out here and then reevaluate down here. So keeping the stop right here, very reasonable. Nice. Still got, there's 11 to 1 if you really want to keep it tight. Because if this is a good pivot, that should hold. That's the assumption you make. So don't fuss with your stop. Don't back it off. Always better to take the stop and then look for a reentry. This is it. I've done this many times. I've learned the hard way. Don't do that. It's almost as soon as you reach for the mouse to move your stop, try and catch yourself and really ask yourself, is it really that critical that you don't get stopped out there? It usually, trust me from lots of experience, as soon as you do that, as soon as you start to move it away, you're almost drawing the market to your stop because it's a mistake, right? And the market punishes mistake. It's just incredibly consistent in the market. If you do something like that, you are making a mistake, and the market will punish you for it. This is how you learn that lesson. That's how I learned that lesson many times doing that. I won't get stopped out. I don't want to get stopped out. It's still good. I'll give it a little more room. You're putting a bullseye on it. Just trust me. It's trading karma. Okay, so that's on Coinbase. Now take a look at this on let's see. This is Bittrex. Totally different. So now I'm in regular scale. I'm not on log scale here because we can see this just fine. And you can see we have 2 entries. So this is the kind of thing I would post up in the room. So members are used to seeing this. So here's the first entry at the 38. So we get fill here at the 38. Here's the stop on that for the conservative. Here's the second entry here at the 50. So if it's going to come down, if we're going to come down to tap the median line, now here we've got a miss of the median line. So potentially this is not done yet. We come back down. So for the aggressive, you're adding here, you're averaging down your fill, just as I showed you on Coinbase. For the conservative, I mean, you could put your stop right below that pivot and say, you know what, I'll take the small, I'll take the little, tiny loser, not going to hurt me. That's, I mean, we're talking about what, that's from 267 to 251. I mean, not a huge amount of dollars there at risk. But if you want to be more aggressive, you might split that difference there and say I'm willing to blend my price down and then reevaluate. Then given that, how much risk am I comfortable taking? If you're going to add here, one thought is either take the first stop and then and then add here to look to try and establish that fifth wave, or if you're comfortable with it and you have the resources to allow for it, so it wouldn't be disproportionately a large amount of risk, if you can average that price down here and keep your stop under the 65, right, where it would make sense, then you still, there's 3 to 1. We're going to get those upper targets. Well, now you got 4 to 1. So you're by taking it down here and opening up that stop potential, you're changing the risk reward. So it's a question of how comfortable are you doing that. So you might want to split the difference here and not give it too much room beyond the median line, right? Knowing that it could go here, could go that low. So that's just, that's about your risk tolerance, your account size, how much money you want allocated to Litecoin. Certainly no reason to think that this count doesn't stay until we trade it until it fails. Right now you've got a perfect 1, 2, 3, somewhere in here we're putting in the 4th. Here's the probability zone. Here it is between the 38 and the 50. So how aggressive you are there, that's really trader's choice and your own money management rules. I can show you where the technical entries are as to how you manage it. That's really your call. Finally, let me show you this where I've got some traders that are in Europe trading this where they have access to Bitfinex. Very different count here. What I see, let me show you this without this so you can see. What I see here, I see an expanded flat. So this, do you see how this is, I'm on a 1 hour. Do you see how we get an ABC here? So this, man, do I have it? Let me put that in white so you can see it. So I see this as an expanded flat. So it's not impulsive, it's 3 wave. This looks much more likely for the 3rd. So if I measure that up, so if I take the start of my 1 wave, project from my 2 wave, well, here's my 2618, which is an extreme, which would be an extreme for, an extreme for the 3rd. So, that looks much more likely to be the 3rd for me. This is too shallow, typically would be too shallow for a completed correction, given the size of that move. So you're anticipating an ABC. What I see is this. So if I put the wave on it so you can see the whole thing put together, I can get it. That's what I see. So we got an ABC expanded flat, and then here's the entry for the 4th down here. So this was the buy here at the 38. I know that a couple of members missed that because we didn't get the 38. So it's front run on the 38. Now I have this channel on it based on that pivot with this as potentially a target up here. Sometimes you just don't get the fill. I know there was a reasonable place to be looking for entry with a front run of the 38. Why? Because we know if that's going to be our 4th, this is your probability zone. But often you'll see in a strong market, 3rds will be between the 23 and the 38. So that's where you have to look at that price action and see what's happening there. Now, because you have an expanded flat, though, I would also be looking at this. I would want to know the relationship between my A wave projected from my B wave. So let me get those waves off so I can get those pivots a little tighter so I can see them actually. So let me get the waves off. I just wanted you to get the idea of what an expanded flat looked like. So now if I zoom in on this and get those pivots just right, so there's that. That's my C. I can go up here. Let me get this down there. So I've got the length of my A wave here from my B wave projecting for my C wave. All right, so here's a logical target here. So just as we would in a C wave, that's the 161, or a third wave, that's the 168.175. We get a little spike through it, but they don't make the 38. So for people that were looking for that fill there, they just got left hanging. Now it may come back down. It may come back down. You might get it. You might end up with a 1, 2, 3, 4. This could be the 4, and we're going to get one more push down to complete it. We could complete it at the 38. That wouldn't surprise me. Could easily go down here. Here's the Vegas wave right here. So there's potential there for that to come a little bit lower and offer that fill. Right, looking for that upside. Here's the target for the 5th. That's the algo target. So we know algos are likely buyers here at the 50 if it gets down here. So again, front running that. So if you're looking at Bitfinex, then anywhere in here. So this is a reasonable spot here, just ahead of the Vegas wave, to be sure you got the fill. I wouldn't go. This is if you want to give it plenty of room, but now you're at 3.2 to 1. I might split that difference here on the other side of the Vegas wave. Now you're at 7 to 1. I like that a little bit better if you're going to front run. Now if you want to get right ahead of the 50, well, that's a little bit better, but you may not get the fill. You want to be at the 38, well then you got to get under the 50. So now you're giving it more room. I'd get just under the 169. I'd get underneath that, allowing for a little wiggle down there. If it's going to come down to it, I don't want to take too much beyond that, because then I may be invalidating the count. So then first algo target, there's 3.3 to 1. I always tell people, try and get 3 to 1 minimum to take the risk. So kind of interesting setup there, and that variance from exchange to exchange is unusual. It's unique to crypto. Okay, there's 17 minutes. That's probably enough for now on that. I've got one more today, and I'll be back in a little bit. Okay, that's it for now.